Crypto Hotep here with another investing video. We're on week 34. We're moving right along here of the family portfolio and dividends tracker. If you're unfamiliar with the family portfolio or these updates or just new to the channel, feel free to go to week number 1 in my channel, and that goes over the whole methodology, thought process, and why I'm doing these videos. Basically, in a nutshell, what happened was we gave our family, or gave my family, I should say, a list of stocks that I researched and asked them which stock they felt most comfortable with or stocks they felt most comfortable with and their overall sentiment of them. We then used M1 Finance as our broker of choice. And within M1 Finance, you can have a main portfolio and then sub portfolios in that main portfolio. They call them pies. So within the family portfolio, every family member has his or her own pie of allocated stocks. Every week we go through these stocks and we go through each pie and we review. We also talk about the market, what's been going on in the market, and then also how we're feeling about these stocks and any buys or sells or dividend activity. First and foremost, these videos are for my own edification and for my family as well, and hopefully they're educational for them and they can find them or watch these whenever I'm gone. And if they're helpful for you, feel free to like, subscribe, comment, let me know what you think. But by no means is this financial advice, so please DYOR for any stocks or any investments that you're choosing to do. Now we can jump in. But before we go to week 34, we go to week 33 because we look at the balance from week 33. So week 33 had a balance of 1374.80, weighted rate of return of over 19%, and then market gain of over $100 at 104.02, dividends earned of $8.12. So this week we are down comparably. So we're at 1349.25, so down on that. Weighted rate of return of almost 14% at 13.95%, down there from last week. And then from last week, market gain of 76.47, down on that. And then dividends earned $8.36. So what happened exactly? Well, the market dipped. The market had a lot of earnings this week. Ton of companies had their earnings this week. And the earnings were a mixed bag. And with that, the market dipped and so did the portfolio. And that just kind of shows you that the markets don't always go up. There are corrections in the market where price has to come back to a level that's valuable for then to go back up again. Price doesn't always consistently go up. And I'll show you that in a chart here with one of our stocks that we do hold. But this is all good here because if we have a more longer term look, which you should be doing when you're investing. So kind of when in doubt, zoom out. If you zoom out, you can see here the trajectory that we've had since February. Since February, when we started these videos, we say it's around, say, sub 200 amount for our balance. And we've been steadily increasing our balance ever since then. And again, it's still not the end of the year. And our balance is almost at $1,400. So in the same year. So with that being said, let's go to the activity. The activity was pretty quiet here. We didn't have any deposits. Remember, we had that big deposit last week. We didn't have any buys because we didn't have any deposits, and no dividend activity, which is completely fine. But with that being said, let's go to the dividend activity from our holdings section. So in M1 Finance, you go to the holdings and then go to dividend income. Here's where you can track that dividend income. And with our investing strategy, dividend stocks are very prevalent. So we do like to track this. So currently, for this portfolio, there's only $12.25 in there. The paid income is $8.12. Pending income, which is income that has yet to be paid but will be, is 54 cents. And then estimated income that will be paid before the end of the year is $3.59, averaging out to $1.02. Now, I say just $12.25 because I know there are maybe newcomers to these videos and they may think these are peanuts, small numbers. And they are, but you have to remember we started the year with this portfolio at around $200 or so. And again, you have to be realistic with yourself. When you're dividend investing and you're starting off with a small account, those dividends are going to be small. They're going to be pennies, literally. They're going to be quarters. And those pennies are going to go to nickels, to dimes, to quarters, and then to dollars, then to $5, $10, so forth and so on. But you have to be patient for that. It just doesn't happen overnight, despite what social media tells you. So with M1 Finance, you can track all this. You can also see the projected amounts, the projected payout amounts here, as well as the pending. You can see upcoming dividends, and they break that down right here. And then you can also see your holdings that you have, what those holdings have paid out in the last 12 months, the dividend yield of those holdings, the yield on cost, the average cost, and then the payout frequency, which is good to track. The payout frequency, most of the time for our holdings, they're quarterly, except for like ones like O. O's monthly. It pays a dividend monthly, for instance. So very good tool to have here. So with that being said, let's jump right into the portfolios here, and let's see what we got. So if we go bottom to top, we look at my wife's stocks here, unfortunately at the bottom, negative 30% return, over 30% return, which translates to negative 18% market gain here. If you've been following the channel, you know the Achilles heel is Celsius. It was great when Celsius was up, but we've rolled that Celsius train down here. And honestly, the fundamentals are still strong with Celsius. And for me, I still like to hold and buy Celsius at this key level. And I will show you what I mean here in this chart. So we have this chart here of Celsius on a weekly time frame. And basically that means that each candlestick is a week of price action. And these blue squares here are key levels, as well as the purple squares are key levels of support and resistance here. So if we look at Celsius on the weekly time frame, you can see from May 2024 all the way down to where we're at now in October, there has been a decline of almost 70+%. Yes, 70+% for Celsius, going all the way down. Now you can see the drastic sell-off here, but as we approach this key level of like $30, $31, you see price slowly start to stabilize out. I don't think we're out of the woods yet. We do have a bullish doji, which is a changing, like a reversal candle right here, which is good because we haven't had any point of buyers stepping into any of these levels here. So I think, and again, this translates back to M1 Finance, where I think we aren't out of the woods yet, but we're getting very close because we're seeing buying pressure in this level. This is also a very psychological level of $30 as well. So this level has held more so than anything else in this price chart right here as well. So a couple things to look at. In addition to that, we are consistently oversold as well. We have trekked in this area for being oversold since August, and we're still in this area. And if you scroll to the left here, the last time we were even in this type of oversold territory, you're looking at January 2022. And when price met in that area, we went from $14 all the way to the highs of potentially 40 right there. And so very bullish still on Celsius because of that and because of those fundamentals of the company. Now, going back to M1 Finance, Google had great earnings, up over 15%. Pepsi down over 1.5%. Then Tesla had a little sell-off here, down over almost 4% there. Not worried about Tesla. Tesla's has common volatility, so you can expect those price swings between 5-10%, something like that with Tesla. So not really worried about that. Let's go to our middle stocks. Our middle stocks, very consistent here, almost 10%. Weighted rate of return year to date, market gain of about $6. Amazon, Starbucks, you know the names. Costco, Target, very good. Nintendo down over 2%. Not really worried about that. As I mentioned last week, Nintendo likes to play in that 1-2% area whether it be up or down. So that falls in line there. And then Tesla, very similarly, down over 3% there. Okay. And then if we go to let's go to our youngest, we start getting into that double-digit year-to-date rate of returns. So our youngest at us astonishing over 24%, market gain of $15.37. And the big players, Nintendo down 4%, very similarly to our middle. And then Tesla is up over 51%. And if you're questioning that, because we were down on Tesla on the past two portfolios, the reason is our youngest has held Tesla longer and has held Tesla through the bumps and the FUD of Tesla in the earlier year this year. So as you can see, the average share price that our youngest has paid for Tesla has been about $216.89. Currently, Tesla's price is $248.98. So the average of that constitutes that over 50% or so year-to-date return on Tesla here. Starbucks and then Apple right here, all in the green there. And let's go second to last, I should say. Our oldest also up in the 20% here for weighted rate of return year to date. Up constitutes a market gain of over $18 right there. And then this is a very simplistic portfolio, which is great. Apple, McDonald's, Costco, Tesla, the big heavy hitters here. Tesla up over 13% because we bought it earlier than the other two family members. Okay, so that's the reason why. Very similar to how our youngest is. So, and then let's see here, and then last but not least, mine. And let's see here, for the past week in a row, I would say for the past maybe 5 or 6 weeks in a row, we are all green on all sectors, which is good. Now, there has been a tech sell-off, though, this past week because of earnings. Some companies doing better than others. Apple did have some good earnings. Coin did not. So Coinbase did not have good earnings. In my honest opinion, the forecast was big disparity between what the forecast was, earnings per share versus, Coin's earning per share was really, for me, it seemed out of hand. I don't think the market fully understands Coin's business model as of yet and how to forecast that. So I think that's where those disparities are coming, because for me, the street always gets it. It's either very under, or very over. There's never like a good median with Coin's earnings and estimated forecasted earnings. Amazon still good. Google, Microsoft, AMD down over 32%. I'm fine with that. I still feel very bullish on AMD and their position with AI and still the graphic processor. So I'm still good. I would still buy AMD all day long. And then looking at growth in meme stocks, which has been pretty cool to see here. Now, not a big portion of my portfolio because of that volatility. You still need the volatility. I just don't want a large stake of it in my portfolio and have it weighing it down. But CrowdStrike, Tesla, I am up on Tesla, which is good. Palantir, which just got into the S&P 500 and still riding that wave. MicroStrategy, as you guys all know, big fan of crypto, big fan of Bitcoin. Michael Saylor he is doing wonderful things with MicroStrategy, with Bitcoin, and it's going to be replicated, I believe, with other companies. I believe Microsoft is even voting on buying Bitcoin during their shareholders meeting in December. So again, I think other companies will be following that trajectory because MicroStrategy has a proven strategy, no pun with that. And then DTE down over about 2.5%. Not really worried about that. And all in all, guys, a very good portfolio here from the family overall. even despite the dip in the market, we have almost 14% return still. And the biggest thing with me, again, when you're investing, you want to zoom out. So we started this portfolio around February or so. I would say we had about maybe $211, $213 or so. And we've just kept building on top of that. It takes time. You're not going to do it overnight. And if you have patience and you just pick those quality companies, you can definitely reap the benefits of investing. But I think what happens is social media distorts everything, including investing, and people think investing is just overnight flick of a switch, and it's not that at all. There are times where you're going to have to ride the wave down to moon up, if you will. So, but as always, guys, if you find these videos helpful, feel free to like, subscribe, comment. But again, as always, happy investing.